Ladies and gentlemen, good day, and welcome to the Q3 FY23 earnings conference call of MTAR Technologies Limited. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Irfan Raeen from Orient Capital. Thank you, and over to you, sir.
Thank you, Michelle. Good morning, everyone. Myself, Irfan Raeen from Orient Capital. We are an investor relation advisor to the company. I hope all of you and your families are safe and healthy. On behalf of MTAR Technologies, I extend a very warm welcome to all participants on Q3 and 9-month FY23 financial discussion call. Today on the call, we have Mr. Srinivas Reddy, sir, MD and promoter, Mr. Guneshwar Rao, sir, CFO, and Ms. Shrelika Jassi, Manager Strategy and Operation. I hope everyone had an opportunity to go through our investor deck and press release that we have uploaded yesterday on exchanges and on company's website. I would like to give a short disclaimer before we start the call. This call may contain some of the forward-looking statements which are completely based upon our belief and opinion and expectation as of today. These statements are not guarantee of our future performance and involve unforeseen risks and uncertainties. With this, I hand over the call to Srinivas, sir. Over to you, sir. Thank you.
Thank you, Irfan. Hello and good morning to everyone. Thank you for taking the time to join us today. Today on the call, I'm joined by Mr. Guneshwar Rao, Chief Financial Officer, Shrelika Jassi, Senior Manager, Strategy and Operations, and Orient Capital, our investor relation partners. We have uploaded our updated investor deck, press release and results highlights from stock exchanges and company website. I hope everybody had an opportunity to go through the same. I'm pleased to inform you all that the company continues to deliver strong growth in top line and bottom line. The company has clocked a revenue of rupees 160 crores with an EBITDA of rupees 45 crores and a PAT of rupees 31 crores. I would like to give a brief overview on the sectoral performance and the future outlook of the company. The company registered a very significant growth in clean energy vertical, which is definitely as expected, and we have done much better than the previous quarter as well. We have generated revenues close to 125 crores in this segment. We have also commenced our operations, as you all know, in sheet metal vertical this fiscal year, and we continue to get qualified for many assemblies moving forward as well. We have already dispatched close to about 25 crores of sheet metal assemblies, and enclosures have been approved, and dispatches are getting commenced this quarter. The company has done significantly well in delivering 1,430 units of Luma boxes and 20 units of electrolyzers this quarter, which is significant, almost averaging 500 units per month. And we also started receiving enough orders in the hydel sector as well from reputed companies like GE and Voith. We are expecting to finalize various discussions with some of the leading MNC companies in the US for the energy storage systems, which will come into effect next year, which would substantially increase our revenue base in a completely different sector under the energy segment. We also initiated discussions with various other MNCs like Paris, Collins Aerospace, and various other MNCs at this time, and we have also received orders from a few of them as of today. As you're all aware that we have signed a MOU with Indian National Space Promotion Authorization Center, it's called InSpace, for design and development of two-stage orbit all-liquid small satellite launch vehicle. We are very excited with this. The design has already started for this particular innovation that we are working on. and the company is in the process of recruiting industry veterans for the launch vehicle project at this point of time. We expect, as I mentioned earlier, we have given a revenue guidance of 55 to 60%, and I would like to revise this upwards based on our very strong Q4 also coming up, with revenues of between 570 crores to 600 crores of revenues being generated for the entire year, this current financial year, which is a substantial increase compared to the previous guidance what we have given, and also trying to maintain the EBITDA margins around 29% with plus minus 50 basis points. We're also expecting our order book, which is very strong, closing order book of close to about 1,200 crores, as against 1,000 crores what we have mentioned earlier. And one of the most positive updates also on the management front is that we have appointed a new Chief Operating Officer, Mr. Rajshekhar Bolampalli, who has a vast experience in operations across geographies in global OEMs like Bloom Energy, Ford Motor, OEM, etc. The company is set to achieve greater milestones under his leadership as well. Also, we are strengthening our management bandwidth across all functions, which has been a continuous process to be in line with our accelerated growth path. Further, move to FY24, we would maintain very good growth momentum between 45 to 50% in revenues, and we'll be sustaining our margins very comfortably. The company specifically is also placing efforts to reduce the working capital days, which our CFO would explain with more clarity. Technically, we are at about 240 days right now, which is lower than last quarter, and we'll try to reduce it further to about 200 to 220 days by end of this year. With this, I would hand over to the CFO, Mr. Guneshwara Rao, to take over. Thank you.
Thank you, Mr. Srinivas Reddy. Good morning, everyone, and warm welcome to our earnings call today. I will take you through the financial performance, post which we will open the floor for the question and answers. So coming to our revenue, so the revenue for the 9 months period is 377 crores, which is higher than the last entire financial year, 322 crores. So we have surpassed the revenue, EBITDA, PAT, everything in terms of absolute numbers compared to last financial year, entire financial year numbers. So our revenue from operations for this quarter is 160 crores, as against 126 crores in Q2 FY23, which is 27% increase on quarter-on-quarter basis. EBITDA reported at 45 crores in Q3 FY23 as compared to 35 crores in Q2 FY23, which is 29% increase on quarter-on-quarter. Profit before tax stands at 42 crores in Q3 FY23 as against 33 crores in Q2 FY23, which is 27% increase on quarter-on-quarter basis. Profit after tax was at 31 crores in Q3 FY23 as against 25 crore in Q2 FY23, which is 27% increase on quarter-on-quarter basis. So our net working capital days stands at 287 days. However, 39 crores was received from Bloom Energy on 7th of January on account of Christmas holidays. This has resulted in 39 days increase in working capital days. The working capital days would have 248 days had it been received in December 22. So when it comes to receivable, out of 241 crores of receivable, 195 crores are current, and the rest of receivables are within the credit period extended to the customers. As informed by our MD, we will maintain a closing order book of around 1,200 crores by end of this fiscal year. Our order book as at 31st December stands at 1,183 crores. So the company has received rupees 893 crores of orders in various sectors, including clean energy, civil nuclear power, fuel cell, hydrogen sector as on YTD 31st December 22. So also we are set to deliver the strong performance in FY24 as well. As the revenue ramps up, we are expecting to maintain our sustainable margins due to operating leverages. In addition, as discussed by our MD, addition to Mr. Rajashekar Bollampalli to our leadership as a COO is expected to propel our growth further. So with this, I open the floor for discussion.
Thank you very much, sir. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on the touchtone phone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Deepak Krishnan from Macquarie. Please go ahead.
Hi, sir. Thank you for the opportunity and congratulations on a good set of numbers. I just wanted to first understand this additional 140 crore order that we've said that we got this quarter, like which segment and which key client, if we can highlight that. And maybe just on your revised revenue guidance of 570 crores, that implies at least at the lower end of 77%. So, what's really driving this growth and which is a segment that really sort of stands out in Q4?
Thanks, Deepak. So as I said earlier, this 140 crores, which actually I should have mentioned in my earlier speech. One good news is that in our product portfolio division, we had got qualified for the ASPs, which is one of our products which we are working on. And based on the qualification and the initial batch production, we have received an order for 100 crores for this product itself. Technically, it's about a requirement of 130 crores per year. This is a great addition to our revenue base. And I would really congratulate my R&D team for being able to achieve this in hardly about 4 to 5 months' time. So the product got approved and we were able to get this order as well. And the rest of the orders are from Heidel and the other segments that we are holding right now. So these orders were expected to come in the previous quarter, but they have come in early Q4 itself. So that's why we had to highlight that to all of you at this time. Now coming to the revision on the guidance numbers, based on the what we have achieved until Q3 and what we're almost at the middle of February right now, we have a clear path in which we can confirm, in a confirmed way, we can say that we will be able to achieve anywhere between 575 to 600 crores of revenues for this year, which is almost like close to 80-85% compared to the previous year. And the growth is primarily coming not only from in the last quarter, which is going to be stronger, not only from the fuel cell area, but also in terms of the new product that we have received the order, and as well as the revenues that we're going to catch up in terms of nuclear and space as well in the last quarter.
Just for the clarity, so ASP is essentially for Bloom itself, right? If my understanding is correct.
Yeah, it's right. That's right.
Yes. So maybe just a follow-up question then on essentially margins. So do we still kind of stay confident in the 29% range, because essentially we're slightly below for the 9-month basis. So, I think would it be that nuclear and space sort of helps us catch up with margin? Just any thoughts on that?
Yeah, we would probably maintain around 29% plus minus 50 basis points at the end of the financial year, because we'll be getting sales coming in from nuclear and space as well in this quarter. And based on the revenues that we generate for the fourth quarter, we are pretty confident that we'll be able to have this kind of margins for the entire year.
Sure, so maybe just one last question from my end. I just wanted to understand essentially, your working capital days. You've sort of received this 39 crores order, on Jan 7, but what is the glide path that kind of takes us to 220? Is it more of, receivables, you sort of converting that into cash? Is it inventory management? Because I see a comment that, there's a higher inventory basically due to Q4 revenue that you're going to book. So maybe just any incremental points on, how you kind of end up closer to 220 days in terms of working capital.
So you want to answer this question? Yeah. Hi, Deepak. Thank you for the question. See, this because of the Christmas holidays in USA, we received 1 week late on this Bloom Energy receivable. As of today, we are 248 days. And looking at the higher guidance given by our MD, so definitely I think we can able to maintain, the working capital days around 225 days by end of this financial year. We are doing a lot of steps in terms of reduction of working capital. But as you know, we are working on a long cycle project for which there is a made-to-order scenario we are working. We need to maintain the WIP because the operating cycle is very high. And looking at the next year growth also, I think our MD has given the percentages already. We need to import material or purchase material 1 quarter in advance for the next year. So the inventory always is for a future sale, not for the what has happened. But incidentally, we need to calculate working capital based on the actual sales basis. So also many of the, the supplier credit terms we are making into LC kind of thing instead of paying advances. Unlike, during COVID scenario, we used to pay advances. So now I think we are slowly converting into the LC credit terms and all. And we also try and do, the receivable factoring on non-recourse basis. We are talking to various people. Once it is materialized, I think drastically working capital reduction will happen. But definitely 125 we will do it by end of this financial year because of the higher revenue numbers.
Sure, sir. Maybe just on Bloom also, is there any improvement in the overall, receivable cycle? Like it's 45 days after shipment, but has, transit time reduced or anything incrementally positive on that front?
Yeah, so definitely supply chain, that is any reduction in the transit times, it automatically will help our reduction in working capital. So I think that is also now happening slowly, but not as before COVID levels. It still takes some more time.
Sure, sir. Thank you for the answers, and I'm joining back on the question. And best of luck for future quarters.
Thank you. Thank you.
Thank you. The next question is from the line of Mohit Kumar from DAM Capital. Please go ahead.
Hi, good afternoon, sir. So my first question is on how do you see the order inflow for FY24 and the revenue stacking up? That's the first question.
See, the order inflow, as I said, we have received the orders until December close to, I think, 893 or 900 crores. And further, by end of the year, we should have a closing order book close to about 10 crores is what we are expecting. So I think we'll have a very strong order book position. We earlier said 1,000 crores, but now it should end up around 1,200 crores is what we're expecting right now.
My question is more about FY24, 12 to 18 months. How do you see this order inflow?
FY24, obviously, we'll be expecting a lot more orders in FY24. We're working on various products, as I said. So our orders inflow, I can't just quantify it right now, but we probably would receive a lot more orders in FY24 compared to FY23. So
we are just looking for some kind of, segmental outlook. I'm not asking you to quantify the exact number, just to just a color on, which are the segment which are looking, which you're thinking, will add materially to the order inflow for FY24. Just outlook, sir.
I basically on the fuel cell side, we would receive substantial orders. The way we have received this year, probably slightly more than that. Then we are doing pretty well in terms of hydrogen sector with GE Aerospace, with Andrex Voice. We have completed all the first articles, so we'll move on to the volume kind of a scenario next year. So we would expect a lot more orders, at least close to more than 100 crores plus in that per segment, which is a new segment for us. And sheet metal would be another area where we would expect a lot more orders coming in. Apart from this, the ISRO has already advised us to get up on almost tripling our capacity because they want to increase the number of launches moving forward. So we would expect a lot more orders coming in. So it's looking very encouraging in all these sectors as well. And that's where we stand right now. So that's why we are pretty confident about getting a much higher order book in terms of from various segments, not necessarily one segment, from various segments as well.
And something on the electrolyzer side, where we are right now, where is the bloom? Are you seeing some indication of bloom that there will be a substantially higher order as we move forward?
Can you repeat that question?
So on the electrolyzer side, hydrogen electrolyzer, are we hearing something? Where are we right now in terms of evolution of our product?
Okay, electrolyzers, we have received an order for 200 numbers, which we completed probably 100 numbers this quarter and probably 100 numbers next quarter. And then once that is done, we're expecting the ramp up, which I have said earlier, the ramp up should happen by fourth quarter, by about third quarter of next year. So that would be substantial ramp up happening moving forward. So we are very excited about that. That's a completely an independent vertical. So that would bring us a lot of revenues back into the stream.
Understood, sir. Thank you and best of luck. Thank you.
Thank you. The next question is from the line of Anika Mittal from Invest Research. Please go ahead.
Hello. Am I audible?
Yes, sir. Please proceed.
Yeah. Thanks. Congrats for the wonderful set of numbers, sir. Sir, one quick question on where do you see yourself in the defense sector in next 3-4 years, and what are all the steps that you are taking? As you see, the current contribution to revenue from defense sector is around 5%, I believe. So how are you seeing to have a good share of that sector?
So defense, basically we are working on a lot of projects with the defense labs right now, which we have been doing for a number of years. But we would obviously like to become a defense, like a prime for Air Force, Navy, things like that. So we are working towards that. It's all about technology in terms of working with various MNCs in a joint manner based on the Make in India concept or the Buy India concept that we have, with 50% of production happening in India for all key projects. So we are in touch with a number of companies abroad as well. So you will hear from us very shortly what steps we are taking to really move into the line of defense prime shortly, probably in a month or month and a half. So as and when it happens, we'll definitely let all of you know about it. But we are definitely working on that.
Great. Sir, and another stuff which I wanted to understand in terms of, see, when you get a big order from any of your segments, how do you accelerate your capacity, sir? So we know that you are incurring capex and stuff, but how quickly you can bring new capacity in line with the requirement of the industry?
So as I mentioned earlier, we have enough capacity to handle whether it's nuclear, space, any of these defense requirements. But we are also aware that we are gearing up on the electronics division as well. One good news is that we have already implemented the cable harness systems in the company, and we are getting qualified with some of the MNCs by next month itself. But we proactively look at the forecast and demand, and then we implement our augment the capacity accordingly well ahead of time. That's what we have done even for the fuel cells, the way we are going in that line. So recently, we already acquired land in the SEZ zone to cater to the future requirements of the company, the way it is growing. So we are proactively working on such things much ahead of time. So we always do that, and we continue to do that.
Okay. Sir, on this clean energy segment, your tie-up with Bloom Energy, so how does that relationship work, sir? Is it like you have a long-term agreement with Bloom Energy, So just to secure your revenues for the midterm, right? So how does that relationship work, sir? Any insight that you can give?
So it's not only about Bloom Energy, but with all our customers. If you look at even ISRO or nuclear programs or any other customer, MNC customers, it's more like a partnership basis because we work on a lot of developmental activities with them, and we work with them in developing and making their product also very competitive in terms of not in terms of price versus volume, but also in terms of innovation that we do. So it's always a long relationship, even moving forward as well.
Okay. And any idea, like will you be getting any big client next to Bloom Energy in near term? Any insights that you can give on that?
Yeah, as I said earlier, we are working with a couple of companies on the energy storage systems which are US based, which could be close to what Bloom could be. Bloom is probably 2 years from now. So these are the companies which we are working in different segments under clean energy. So obviously we are adding a lot more customers. We have a great platform to work with all of them, and our qualification process also is pretty quick because of the platform that we have created over the years. So definitely we'll see a lot more customers coming into play over the next 1-2 years.
Great. Once again, congrats for the good set of numbers. That's it from our side. Thanks, sir.
Thank you.
Thank you.
The next question is from the line of Renu Baid from IIFL Securities. Please go ahead.
Yeah. Hi. Good morning, sir. So I have a couple of questions. First, in your presentation, you mentioned that you started work on ceramic assemblies for Bloom. So if you can give some perspective on what are these products, and they will be associated with the key lacquer range or the electrolyzers with which end product of Bloom, and how are we looking at growth in this market? Also for ceramics, are we doing any particular capex at the moment or not?
No, ceramic assemblies, we don't need any capex at this time because it's the kind of a product which we are importing it from US at this point of time. So as we have done earlier, the number of workouts we have indigenized and localized everything in MTAR itself. That's how our strength with Bloom has grown from step to step. So these ceramic assemblies go in all the systems, whether it is in Tilaco or whether it's in Yuma or even the electrolyzers as well. So we are in the process of getting qualified for that, and probably it takes a quarter or so to get qualified. Our existing equipment machineries can handle this. We need to import the ceramic boards from Germany. That's the only thing which we need to do. There are some supply lead times involved in that. So once that is done, we'll be all set for that. So if you look at the ASPs, we have done a remarkable job in 3 to 4 months' time. We got qualified, and we also received an order for 100 crores in the product division, which we transferred as products. So similarly, we are also working on heaters. Right now it goes into electrolyzers. So that would take about 6 months' time to get qualified, trying to localize that as well because it's being imported from US. And the recent development is there is a product called dielectric which goes into the hot box system, which has got a potential of almost 200 crores plus. So kick-off meeting on that to develop that is going to happen starting from next week onwards. So we are trying to do more and more of these products. So all this, the upside of all this will come into play once we get qualified.
Got it. Right. So just to clarify, the ASP 100 order that you have received is classified in the products business and not in clean energy, or it's reflected as a part of the clean energy portfolio itself?
So it's technically clean energy, but actually it's a product which we are supplying in multiple numbers. So if you look at whether it is ASPs or bellows which we are using in-house, but it's also a product. Then roller screws, finally we got qualified for roller screws. We submitted the FAs as well. We're just waiting for Government of India to give the nod for import ban on that. So all these would be classified under products, including the EMAs, electromechanical actuators, which we are doing right now. So our idea is to build this product portfolio, whether we use for clean energy or for space or defense or nuclear. So That's how we want to classify them moving forward.
Got it. So, okay, that explains it. Secondly, can you share with us the developments on the electronics business division which we had set up? We had done some trial of first articles for Bloom as well, and we're targeting some new business in this space. So any updates on the electronics division?
Yeah, absolutely. We have already established the cable harness business. The equipment, everything has come. We have established it. We are in the advanced stage of qualification with Bloom, which should happen in this quarter for sure. So we don't have to anyway buy the cables anyway moving forward for our enclosures. Similarly, ISRO also has come and approved our division, including HL also had reviewed our progress in this. So our idea is to move into the electronics division both in domestic defense market as well as for exports. And once we complete the cable harness, then we move on to the other segments of electronics step by step. As I said, it's a 1.5 years kind of a plan. And ultimately, we're going to move very strongly to the electronics division, probably a couple of years from now, in all different areas that we're looking at in the electronics sector.
Right. So just trying to understand, beyond the cable harnesses, you plan to do the PCBAs required for, as in the EMS for PCBAs for ISRO, HAL, and other defense PSUs?
Yeah, that's the idea. Once we complete the cable harness, then the next step is going to do the PCBs and the box builds and all that. So that's the idea of moving step by step into different areas. Obviously, we are looking at a lot more other areas in the electronics division, which is too premature to talk about, but we are sincerely looking at really building a product portfolio, or in terms of the segments that we can work on the electronic side of the story in the defense sector.
Got it. And so lastly, while you have shared inflow outlook across other segments, any word on the nuclear large project awards have been delayed for quite some time now, and we're still waiting for the fleet tenders to pick up momentum. So any updates on the order inflow prospects on the nuclear side for current year 23-24, and how should we look at the execution on this business?
See, nuclear, what we are trying to do is our projects are almost like, for example, it's a very important question what you asked for. See, the fueling machine head orders what we have, which we are almost exclusive in this country. Some of the bought-outs we are asked to actually indigenize it because of the need for Government of India, what actually they're facing issues with the Russian situation right now. So that's how there has been slight delay in terms of getting these bought-outs indigenized. So we are through with all that. So you'll see the dispatches happening in the fuel head machines starting from this quarter onwards. Similarly, we also got orders for the fuel transfer systems, the SMBC bridge and column, all these orders which MTAR does exclusively. We just received those orders. We are in the process of sourcing the material and the bought-outs for that, which some of the bought-outs we still have to indigenize. I'll just give a simple example. In terms of Thomson bearings, they have put a ban of not exporting those things to India for whatever reason. So now we are developing our own Thomson bearings. The import part of that is 10 crores, but we probably we are developing that and we'll be able to do it at 20% of the cost. So we have been asked by Government of India to indigenize as much as possible so that the dependency on the external factors will not come into play at all. So we are working on all this parallelly to make sure that India is self-reliant by itself, and we are contributing a lot towards that. And that might that's the thing which is slightly delaying the process, but we'll catch up with those numbers very quickly. But most important thing is trying to indigenize certain things which are very crucial for this country at this time.
Right. And will that also mean that once you have indigenized some of these components?
Yeah, go ahead.
Will that also, so will this also mean that once some of these critical components are localized, you will have assured revenue shares from the customer or from NPCIL for these projects? Mostly a single vendor basis, or it would be again bid based?
That's what we have seen in the case of water lubricant bearings. We are the only suppliers in the country with an import substitute. The specialized ball screws as well. So similarly, the roller screws are another thing. So pumps and bearings. So all these are going to be like exclusive because we are spending a lot of time in R&D to develop them. It's not easy to do all this. In engineering, it's not that easy, but we have been doing it. We have been achieving it. So we'll benefit a lot moving forward. So that's the idea behind this whole thing.
Got it. Thanks much and all the best, sir.
Thank you.
Thank you.
The next question is from the line of Ranjit Sivaram from Mahindra Manulife Mutual Fund. Please go ahead.
Yeah. Hi, sir. Congrats of numbers. Sir, one thing which we wanted to understand is that, what is our strategy in terms, if you want, we were also planning to de-risk ourselves from the dependency on Bloom. So currently, you also had mentioned last time that we are looking at a Voith and other kind of hydropower and other things. So in a three-year perspective, if you look at it, how much will be Bloom's contribution in your overall top line, given the ramp up in the other segments which you are expecting?
So let me answer this question to you in a different way. We definitely do have a strong strategy moving forward over the next 3 years to 5 years. So MTAR works in different segments. It's not only in fuel cells, but we're also now into hydel, wind. We're also into nuclear programs, space and all that. So if you look at Bloom, see today Bloom is the number one leading company in the world in fuel cell technology, crossing $1 billion turnover. If you look at the UBS report, the latest UBS report on Bloom, they're going to be a $3 billion revenue company over the next 2 years and all. So what I'm trying to say here is that this company was built over 15 years and the technology has evolved and they're competing with the grid power. So I don't see any kind of risk for the company as such. But that doesn't mean we're stopping at that point. We are working with other fuel cell companies, but other fuel cell companies are way behind Bloom. They still have to, stabilize on their prototypes, ramp up, and come to a level where Bloom is. So that's going to take some time. So you have companies like Clupper, for example, right? So their major revenues are the material handling systems rather than the fuel cells. So they still have to gear up. So we would love them to develop their products very well so that they can have the need of companies like MTAR to work with them. We have no exclusivity with anybody. We keep each individual IPs very independent. So we are working with a number of companies. As I said, we are working with Fluence Energy for the energy storage system. It's going to be a huge gain in terms of revenues over the next 2 years. We are working with Emer Venues, another company which we are working with, a US-based company. So looking at Voith, GE and Andrix on the hydel sectors, we've already completed first articles. We're getting repeat orders right now. So the company's going in a path where we'll have a lot more wider customer base. But the numbers coming from Bloom are purely based on their performance in the international market. So I don't see that as any kind of risk strategically, but we are working towards various ways to enhance our customer base.
Okay, great. And sir, the space program, I think in your PPT also you have elaborately mentioned. So, what is the overall size of these projects if they fructify in the next 2 to 3 years, and how do you see that growing? At what size it can attain in a long term perspective? Can it become a 300-400 crore business?
It would become a 300, 400 or even a much bigger business once we launch our small satellite launch vehicle, which we said we started working on it. It's a 3 to 4 years of program which we're working on. We're having our own launch vehicle by itself. We have all the facilities to do that. We have right now the team also is getting recruited, so we're right on track with that. But as far as that's a game changer for MTAR, and that's our plan beyond FY26. But as far as ISRO is concerned, obviously I mentioned earlier that they're looking at 3 times the requirement the kind of launches that we would like to do. They've asked us to gear up on our capacities, which we have in most of the areas. So that would grow at a CAGR of 30-35% year-on-year basis moving forward. So other than this, the major thing what's going to happen is once we launch our own vehicles. So that's what our vision is in the privatization of the whole space sector, which the Government of India is also pushing for. And since we have enough experience of 35 years in this line, it would speed up the whole process moving forward.
So in our own vehicle, probably the engine, the Vikas engine will be kind of bought from ISRO, and some of this engines which you are supplying to ISRO, that will...
It's nothing to do with the Vikas engine. It's our own engine. That's what I'm trying to tell you. So we are designing and developing our own entire launch vehicle. So ISRO's Vikas engine is completely independent of that.
Okay, and when is this?
Sorry, Mr. Sivaram, I will request you to please.
Yeah, sure. Okay.
Thank you. Ladies and gentlemen, in order to ensure that the management will be able to answer questions from all participants, please limit your questions to 2 per participant. Should you have a follow-up question, please rejoin the queue. Thank you. The next question is from the line of Sandeep Tulsiyan from GM Financial. Please go ahead.
Yeah, very good morning, sir. Sir, is it possible to quantify? Is it possible to quantify some of these new products? You quantified ASP assemblies. Sheet metal, of course, we have done better than what we had guided for the year in the 9 months itself. But for next financial year, FY24, if you could quantify what would be the sales you could derive from these areas like sheet metals, enclosures, as well as the new electrolyzer parts that you mentioned you would be indigenizing.
See, as I said, the ASPs which we have developed and we received an order for 100 crores, it's an annual requirement of about 10 months. It's the same product we talked about in terms of numbers. Each of the ASP is about $55, and it's close to about 130 crores of requirement every year, which will grow year-on-year basis based on the number of hot boxes which will grow every year. When it comes to enclosures, we are looking at almost like 3,000 numbers of enclosures moving forward in the next financial year, because we are all geared up for that. There has been a certain lead time on various parts, bought outs, which have to go into the enclosures, so we are all set for that. We got qualified for it, and in fact, the UL certification for enclosures also is in the last stage. Probably by next week we should receive it. So this would really enhance on a quarterly basis. We're looking at almost like somewhere between 600 to 800 enclosures going out every quarter. When it comes to sheet metal assemblies, we are actually doing really well here. We said earlier 67 assemblies we are qualified, but right now another 15 to 20 more assemblies we're going to get qualified for this, and that's going to increase our revenue base moving forward. Now, the electrolyzers, as I said, is going to, once we complete the 200 numbers, the ramp up will definitely happen by the third quarter of next financial year for sure. So we are trying to gear up for that. So keeping all this in mind, we have a very strong growth outlook, not only in fuel cell, but in hydro also. We got qualified in a number of areas right now with all these companies. So we are going to have a very strong growth outlook even for the next financial year as well.
Got it. So second question is on nuclear. I think, of course, you had a very good build-up in the order book, but revenues in the first 9 months are definitely, you could say, very similar to what we did last year. So assuming there is some bunching up of revenue going to happen in fourth quarter over here, what could be the annual revenue we could look at in the nuclear segment for the current financial year?
I think, as I said, explained earlier, we're trying to indigenize a lot of bottles which are forced to indigenize because of the restrictions by Government of India. We're working on that. But we would definitely do probably between around 45 to 50 crores of revenues in nuclear. The fourth quarter would be much stronger than in nuclear program, which we'll start dispatching our FMEs in the fourth quarter. So that will propel the revenues. And moving forward, since everything is in place for the FMEs, we have still 5 more FMEs to deliver that would get done in the next year comfortably every quarter. So then we work on the other projects which are working on the fuel transfer system, FMBCs, and all will come into play step by step. So there'll be a growth happening moving forward in nuclear programs since everything is falling into place, especially the indigenization effort what we are trying to do for Government of India right now.
Understood. Last question is on the working capital. If you could also give us the absolute number in rupees crore, what was there at the end of December, and then after receiving this 38 crore, how much did it reduce to?
Yeah, the absolute number of working capital value is 394 crores, and we received 38 crores in Jan first week. And entire January, we received around 75 crores, which is all are well within our credit period.
So this 240 crore, what is mentioned in the presentation of receivable, this is after reducing the 38 crore?
Only receivable value, that is only receivable value.
No, that is after reducing the 38 crore, or it is prior to?
No, not reducing. This is before reducing. We don't want to reduce because as of December 22, this is the scenario, so we are maintaining. So this is an additional explanation we are giving to just have a transparency.
Understood, sir. Thank you so much for that.
Thank you.
Thank you. The next question is from the line of Neerav Dalal from Maybank Investment Banking Group. Please go ahead.
Thank you for the opportunity. I had 3 questions. First is, say for the FY23 revenues of about 550 to 600 crores, what would be the annuity portion for that going ahead? Because you obviously mentioned that in the ASP 130 crores would be something that would recur every year. So just wanted to understand the annuity portion of the business and how that has increased. That is my first question. The second question is in terms of as we indigenize the products or start to make products in-house, would that mean increase in margins, or would that mean that the R&D expenses would also increase for us? That is question number 2. And in terms of our capex plans going ahead, what would be our capex plans for the next couple of years?
See, as I said earlier, obviously, as we have revised our guidance based on what we can clearly see right now, a range of between 575 to 600 crores of revenues coming in for this year. And moving forward, I've said that for next year, FY24, we're looking at 45 to 50% growth, revenue growth compared to the current financial year. Now, the growth is happening in terms of products, what we have developed, plus also in the growth in the fuel cell segments, also in the hydrogen segment as well. And growth is also equally coming also from the nuclear programs, where we are in advanced stage of execution in some of the projects, and also in the space sector as well. So it is evenly distributed among all the various segments that we're working on. And probably, as I said, some of the new customers who have joined in, we're going to generate additional revenues from the new customers like Dallas, Collins Aerospace. All these customers have joined in already. And customers in pipeline as well in the energy storage systems will contribute towards additional revenues in terms of phase and batch production for next year. So it's very clear indicative that we would comfortably do that 45 to 50% across the board in all these sectors.
Right. So just one follow on this. So right. So we are looking at growth, but would there be an increase in the annuity portion of our business where we have visibility and it would recur every year for us? So that becomes the base, and then over and above this, what would be the growth, say for 25, 26, 27 as the years go by. So just wanted to understand that part of it, whether there is any annuity portion.
Yeah, I got your point. So most of our projects, there will be a growth on annuity basis. It's not like a one-time project for us. Like if you look at space, we continuously supply the Vikas engines of the rocket engines that we supply, the cryo engines. We are launching the semi-cryo next year. So there's new products coming in, and the continuity of these existing products growing year-on-year basis. If you look at our fuel cell segment, every year it is growing in terms of the number of units that we are doing consistently. So that's growing, and also the new products that we are launching every year. So the growth is happening not only on a regular basis from the existing products, but also the new products that we are developing year-on-year basis, right? So the margins also would more or less sustain even with this growth what we are looking at, which I have said around 29% plus minus 50 basis points. So that's what we will continue to maintain moving forward. And you asked about the capex plans. Yes, we have some bottleneck areas. We have some new customers coming in the energy storage system. So we'll have certain capex plans. We have to crystallize that. As and when that is done, we'll intimate everyone about it.
So just on the margin bit. So as we indigenize or we start to manufacture goods products in house, would there be any benefit in terms of margins, or we would use that same into R&D?
See, our R&D costs are there, but they're not very high because we use our existing facilities, our existing team works on it. Okay. But we do have, so there's not much of a amount to really highlight it at this time.
Sure.
Yeah.
Sure. Thank you.
Thank you. The next question is from the line of Jonas Bhutta from Birla Mutual Fund. Please go ahead.
Hi, Mr. Reddy, and congratulations on a great set of numbers. So just picking up from one of the previous questions was on the capex. What is the capex that we've done so far in the 9 months? What is the target for FY23, and how do we look at it for FY24?
So I'll answer this question. Yeah, I'll answer this question. I think for last 9 months, we have actually capex around 80 crores we have done it. And there is a capital work in progress of around 72 crores is there. So which we will capitalize over a period of time, maybe in this quarter, something will flip over to next quarter. This is because last year we have actually constructed one new facility in Adipatla where our sheet metal and fabrication setup we have done. So something was spillover from the last year, around 40 crores is spillover this year. And also around 45 crores we are spending for augmenting our capacity in our clean energy business in EOU. So we have increased our capacity by almost 4,000 to 10,000, 2.5 times we have increased. So this year also, as Mr. Srinivas Reddy is telling, we are crystallizing, looking the numbers. So we will communicate maybe in the coming quarter.
Sure. So should we pencil in more like the same number of about 90 odd crores even in FY24?
Not that much. Definitely it will be lower as we have to address bottleneck and also some of the new customers which we are working with them. There may be some little capex is required. So some sustenance capex we need to incur. It is not going to be that much. It is very, I think, lower, much lower than the last 2 years.
Understood. So my second question was on again, client concentration. So while we've done a phenomenal job in terms of adding newer products such as ASPs and sheet metals and enclosures, etc. But the idea when we were setting these capacities were also to bring in newer clients. So if you can talk about, sheet metals or roller screws, etc. What will be the ex-Bloom revenue that or in terms of marketing are we doing that over the next 1 or 2 years, excluding Bloom, where can these revenues be for these 3 or 4 products that we've developed in the last year and a half?
It's not about 3-4 products. Basically, what we're looking at is we're adding a lot of other customers, right? For example, as you said, in sheet metal, we are looking at Agbil in Taiwan. They're looking at us in terms of delivering a lot of the requirements for sheet metal for them. So we are still discussing in a discussion stage with them. GKN Aerospace has already indicated they're going to release orders this quarter for us, which is a combination of sheet metal and machining and stuff like that. So we're adding a lot more customers in different segments. We can't quantify at this point of time, but as I said, a lot wider basket of customers are in our portfolio right now. Some are in first article stage, some have been qualified, some are moving into volume stage right now. moving forward in the next quarter. So overall, the concept is that I will not say that, as I explained earlier, Bloom is growing rapidly, so that's good for us. But we also create a platform to work with other energy storage companies like Fluence Energy. We are trying to work with them. That's going to be a huge thing. Like we're looking at almost like 300 to 500 crores of revenues coming in from Fluence Energy over the next 2.5 years. So we are looking at customers where a lot of R&D is required, a lot of development activity is required, but that should convert into a meaningful commercial, meaningful numbers for us in the long run. So we are trying to add customers in areas where MTAR can really contribute to a greater extent, where entry barriers are very tough. So that's what we are focusing upon right now. So we've been in a very good space moving forward, let's say 1 year, 2 years from now.
Got it. And my last question was regarding Bloom and the hotbox. So, one, if you can tell us, we started off with a mandate where we were realizing almost $8,000 to $9,000 per hotbox. But with all of these product additions that we've done over the last few years, our wallet share was likely to increase. And part of that is also indigenized. So within that 9,000, say a bellows, etc., you localize and you get more value for more margin, though the ASP largely remains $9,000. So I'm just trying to think through, where are we? So what is the realization per hotbox as of today, and where does it move going forward?
So we are trying to do more and more. So ultimately, if you look at the cable harness, we're going to get qualified next month.
Right.
So we have the ASPs, we have the enclosures, we have the sheet metal assembly. So we are moving close to about 17 to 18 or 19,000 for the Yuma hotbox to accumulate everything together. So we are going to a stage where we can completely do the box build ultimately in a year's time from today. So that's the ultimate goal for us. Probably trying to cater, like we have started exporting to South Korea as well directly for Bloom instead of sending it to US. So the idea is for the Asian markets, for the markets closer by, it doesn't make any sense to send the systems from here to US and back and forth. So it's going to evolve in such a way that in a year and a half, probably we'll do the entire system as such. So it has to get evolved that way. There's a lot of qualification process for every stage of it, right? So in engineering, that's what happens. So ultimately, that's the end goal.
Got it. And we are set for 7,000 hot boxes next year, right?
Yeah, that's it.
And the order for that is already in our book, or a part of that needs to come through during FY24?
It's already there. Only we have got orders till December of next year. So probably they'll review that. The orders are released almost like 6 to 9 months ahead of time. So we'll probably get the next batch of orders in first quarter of next financial year.
Got it. Understood. Thanks a lot and all the best for the future, sir. Thank you.
Thank you. The next question is from the line of Aman Viz from Astute Investment Management. Please go ahead.
Good afternoon, sir. My first question is on the disclosure you had talked in the last call about Fluence Energy order, and we were expecting around 300 to 500 crore in 1.5 years. So, sir, if I correlate this with our guidance on that 600 crore top line that we are aspiring to achieve in FY23, 50% growth is around 300 crores. But are you not taking into account any revenue coming from the Fluence Energy orders, or is there any delay which you are seeing? If you can give an update on Fluence Energy and tie up with the revenue guidance.
See, any organization like Fluence Energy or any other company, Enervenue or any company for that matter, first you need to do the first articles, you need to do the batch production. It's a process by itself. So by plugging in those numbers for the next year doesn't make any sense to me. So whatever numbers are generated from that is something which is a small upside to it, but the real ramp up will happen by end of next year once we implement everything. So probably look at the major numbers coming in moving forward for FY25. That's how it works.
Sure, sir. And you think this can be, like you talked about, as big as Bloom Energy in the next 2 years?
Which one? The Fluence Energy?
Yes, yes.
Yeah, so basically there's a lot of demand for energy storage systems internationally. So I can't say it's going to be as big as Bloom Energy, but it's going to be one of our biggest customers moving forward from FY23 onwards.
Sure, sir. My second question is on the ISRO SSLV launch, which happened today, and also our plans on it. So what I understand, and you can correct me if I'm wrong, so ISRO has been planning to ramp up the number of launches for last 3 to 5 years, but it has been stuck at that 10 odd level, 10 to 12, which their target is maybe 18 to 20. So if you can talk about, do you see that happen in FY24, or it will take more time on the ISRO side as well as, so we, again, an average launch cost around $40 to $50 million SSLV. So what will be our portion of value addition in that? Because now you are also working on the full engine apart from the vehicle body. So if you can explain these two things.
See, the one main thing from ISRO side is the recent JSLV launch, which they did, was highly successful. So they have a lot more demand on such launches moving forward. So that's the reason why they wanted to increase the number of launches, commercial launches, and that's where the demand comes from. You know, asking us, we received a letter directly from the chairman of ISRO to work on more of engines to be produced moving forward. That probably, as you're all aware, the material is given as free issue by ISRO. So they have to gear up from their side as well. But we're looking at probably in the second half of the year, they're going to gear up to not only from our side, from their side as well. So they're looking at those launches going higher and higher based on the success what they had. Now, as far as our contribution to their launches, it's not only on the engine side, but we do a lot of electro-pneumatic modules. We do a lot of other assemblies for them. So that's something which in every area there's going to be an increase. But our main vision 3 to 4 years from now is going to be our own launch vehicle. We still have to quantify the numbers for that, but our design work has already started much ahead of time. 6 months back, we have a signed MOU with InSpace as well. So that's going to be a big game changer for MTAR moving forward 3 to 4 years from now. So we'll be able to launch the satellites with our own launch vehicle. And Government of India is also looking for so to be more of an R&D division rather than looking at and asking the industry to do it. So whoever is capable of doing it, since we have 35 years of experience in this line, probably will move ahead in a much faster pace to get this done. But to build the entire launch vehicle, it could take at least 3 to 4 years time, and that's what we're working on right now.
And if you can just explain this part which was left, typically as of today, what is our share in a typical launch, as well as what is the rough? I think engine will be one of the main components.
It's difficult to quantify the share because the numbers from government are never given to us. So we can only say what all we can contribute. We contribute a sizable portion. For example, our engines are used for the last 35 years by ISRO. There's never been a blemish till today. None of the launches have failed because of the products what we are doing. We are the only cryo engine suppliers in the country today for ISRO. So we have developed this over years, 8-9 years of research in the past. So that's the kind of technology we are holding with us. So we are continuing to support ISRO as much as possible. We work jointly with them, and we have a great set of scientists and engineers in this country. We all work together. Frankly speaking, we are been very successful technically in terms of achieving such launches without depending much on any of the international, any other countries abroad. So it's been all done indigenously, and that's a massive feat that we all need to appreciate.
So this 3x capacity increase later, was it received recently, or is it like long time back?
Can you repeat that question? I can't hear you well.
We had talked about ISRO has given us a letter to be ready for increasing our capacity to 3x. So is it a recent event, or is it 1-2 years back things?
No, it's a recent event. It's not 1-2 years back.
Okay, sure. That's it from my side. Thank you.
Thank you. The next question is from the line of Mahesh Bendre from LIC Mutual Fund. Please go ahead.
So my questions have been answered. Thank you so much.
Thank you. The next question is from the line of Amar Maurya from Alpha Accurate Advisors. Please go ahead.
Perfect, my dear friend.
As the current participant is not answering, we move on to the next participant. The question is from the line of Deepak Krishnan from Macquarie. Please go ahead.
So my questions have been answered. Thank you.
Thank you. The next question is from the line of Abhishek Agarwal from Naredi Investment. Please go ahead.
Good afternoon, sir. My first question. Recently, MOU signed with Space. Can you share more color and opportunity size in next 1 to 3 years? And second question, furthermore, promoter stake sale in your cart.
No, Abhishek, can you repeat your first question, please?
Sorry, sir. Sorry to interrupt, Mr. Agarwal. I would request you to use your handset to ask a question, sir.
Am I audible?
Yes, sir. Please continue.
Yeah. Okay. So my first question, recently MOU signed with Space. Can you share more color and opportunity size is in the next 1 to 3 years? And second question, furthermore, promoter stake sale in your cart.
What was your first question about? You're talking about Space?
Recently MOU signed with Space. Can you share more color and opportunity size in next 1 to 3 years?
Oh, that's what I said. Like the MOU signed for a joint, working together to build a launch vehicle by MTAR, completely independent of ISRO, but with enough support from ISRO in various areas. That's what Government of India wants to do by using a launch pad, test facilities, etc. So this will come into play 3 years from now. Once we build a launch vehicle, then we do the developmental launches and then the commercial launches. So we're looking at about 3 to 4 years time frame for this. But that's going to be a big game changer for the company. And your second question on the promoter, what is that second question? Can you repeat?
Furthermore, promoter stake sale in your cart.
Where did that come from? I have no idea about that. There's nothing like that right now.
Okay.
Thank you. The question is from the line of Sanjana Deshpande from Stock Access. Please go ahead.
Good afternoon, sir. So firstly, I would like to understand, since the demand prospects are high in clean energy segment, so what is the exact order book for clean energy segment and how it will be executed in FY24 and 25?
See, the order book for clean energy segment, I don't have the exact number, but probably beyond 600 crores plus, I think. So all these orders are executable by December of next year. And that's what it is. And it is growing at a similar pace year-on-year basis. Plus, we are going to add further products to it, as I explained earlier. So we are in a great space of it. So there's nothing to.
Okay. And second question is how we project the revenue inflow from this particular segment, because not all that we are executing will be converted into revenue in that time period. So your comments on that.
Whatever orders we have as of today needs to get executed by December 2023, right?
Okay.
So
yes, sir.
That's what it is.
Okay. Thank you. And congratulations on a good set of numbers, sir.
Thank you.
Thank you. Ladies and gentlemen, that was the last question for today. I would now like to hand the conference over to Mr. Srinivas Reddy, Managing Director and Promoter, for closing comments. Over to you, sir.
Thank you, and I would like to thank everyone for sparing their time to join us in today's earnings call. I would like to say the growth numbers will come in the case of MTAR, but I would love to say this that I would like to thank all my engineers and the R&D team for building such fabulous products which are generating good set of numbers, just a byproduct of that. So we'll continue to do that moving forward as well. And thank you so much for all of you for your support. Thank you.
Thank you, sir. On behalf of MTAR Technologies Limited, that concludes this conference. Thank you for joining us, and you may now disconnect your line.